I'm a quantitative researcher there, so I'm designing mathematical algorithms to predict stock prices with that. So I have a lot of credentials with this. I've been doing it since I was 9. So the main purpose of this club is going to be to teach you guys everything that you need to know about investing. So what do you guys know about investing? Anybody?
Stocks.
Do you know what a stock is?
Yeah.
It's like share of company.
Yeah, that is correct.
Does anyone have any questions about his credentials or any, like, anyone want to know more?
How did you get into it?
I started doing work around my grandparents' house when I was 9. I was doing landscaping and stuff, and then my dad hired a financial advisor for me. And then I kind of just started reading up on it from like an early age, and then it was kind of like, I think I was maybe 14 or 13. I sent a report that I wrote on I always just studied it myself, and I just always tried to do it myself. And then I sent a report that I did on it was a HF Sinclair. It's a gas station and oil refinery company, and I sent that to the CEO, and then he hired me.
Drake.
How much money have you made so far?
I won't
That's
say.
federal, that's
but-
federal.
That's federal.
I won't say, but pretty decent sum. So
How many figures?
pretty big figures. We take about 1 to 2% yearly out of the 83 million, depending on the client and like their status with us and stuff. So that ends up coming out to about like 1.6 million in annual revenue. So that's how much our company makes a year. But okay. Does anybody just have any just ask me like any general questions? Does anybody need anything answered before we start going into it?
So you get paid like what, an hourly salary, or do you get like a portion of your investment?
So I get paid hourly, but I also have contracts with them. So I get paid, like, for example, one of my contracts is I get paid $5,000 a month, and then they rent my algorithm from me, and then they use it for their clients and stuff. So
That'd be cool.
What math are you taking right now?
I'm in college algebra, but I've self-studied all the way up to stochastic calculus. Yeah. So any other questions? General questions? No. Okay. So Greg.
What will we be doing in this class?
Good question. Okay. So I have a few ideas for this club. The main goal here is to get all of you guys educated in investing and finance so that you guys can be set up for financial success like after high school. Because there's a lot of gaps in our current education, especially in high school with this stuff. They don't teach a lot of this. Like, for example, I mean, none of you guys know, well, not this is a generalization, but most of you guys don't really know how to invest. And I think that's a problem. So I want to fill that gap, and eventually, probably 2-3 weeks from now, I mean, it depends how far we get, but or how fast we progress, but eventually we're gonna open up investing accounts for all of you guys, hopefully. We'll have to obviously talk to your parents and stuff, because it has to go through them. It's called custodial account, so it's technically your money, but it's under their name until you turn 18. So that's what I've had set up, and we'll try to get that set up with every one of you guys. I would assume. I mean, raise your hand if you work a job. Okay, so I mean that's near half, but still, yeah, I mean you can still invest even without having a bunch of money. It's still important because it accumulates, and even just having the knowledge is important for after high school when you start working jobs and stuff. So, all right, I'll just give like some basics on like the stock market and just how this all works and why it's important. I'll show you. So. The stock market, so there's all the companies, you know, think Walmart, Target, all of them. You can look at their financials and you can buy a share in their company. So basically when you buy a share in say Target, let's say I buy one share. Or let's say like here, well we'll pull up an example here. So we'll say Walmart. Alright. Currently, they have a market capitalization of $674 billion. So that means their business is worth $674 billion. And the way that is calculated is you have your shares outstanding. So this is how many different shares of the company there are. So there's 8 billion shares of the company. Each share is worth $83. So this share price fluctuates. So the value of the business grows over time as the share price increases. So what this matters for you guys is that you can buy parts of successful businesses and then you will profit off of them. Because you can buy it at a low price and then as it increases over time, you can sell it at a higher price. This is like, it's called capital appreciation. So as you, like let's just say you put $1,000 in. Normally the stock market averages about 10 to 11% a year. So you'll make 10 to 11% on your initial investment. But there's something called compound interest. Who's familiar with that? Okay, so some of you guys. Okay. So compound interest, here's an example of it, okay? So this is using a hypothetical situation of an initial investment of $1,000, a monthly contribution of $200. So this would say $100 out of each paycheck, we'll say for 10 years. Let's say you're earning 12% on your investment, which, I mean, that's probably an average if you're using a financial advisor, like if you hire somebody like me to do it for you, or something that you guys will be able to do by yourselves, probably in a few months. So in 10 years, you would have $48,000. Because as, here, let me get this actually, draw one. Oh, can I move this, Miss H? Alright, so let's say that you guys invested,
You can move that too.
what, this?
Yeah.
Alright, so let's say you guys invested $1,000 in 1 month, okay? Second month, let's say you made $100 in your investment, okay? You now, let's say you made 10%, so 10% of 1,000, obviously 100. So now you have 1,100 in month 2. Now you make 10% off of this. What is that? Make more. It accumulates. As you make more money, you then make more money off of your principal. So here is a real example of that. So in 10 years, you would have really contributed $25,000 to your investments, but the future value of it would have been $48,000.
So let's say you put more money in each paycheck, you can get more over time.
Yeah, exactly. And it's also, as the period of time increases, it's exponential. This is using the exact same situation as before. In 20 years, you'd have 200 grand. And that's not adjusting the 200 per week. That's just assuming, 200 per month. It's assuming you do that perpetually, and you don't increase how much money you contribute. So.
What if your stock market crashes?
Yeah, so obviously there is risks with your investment. I mean, the stock market is the biggest definition of with no risk, there's no reward. But
Fears good.
Okay guys, just I gotta go, but I gotta finish something quick. We're gonna create a form and then maybe in like a day or so, we'll probably send it out to you because he'll give a remind code at the end of class. We're gonna see what day works best for you because I know a lot of people have like sports Thursday after school. So if you guys want to do like Monday or Friday, just put it on the form.
yeah, we're gonna try to
Thursday's
figure
not
out
set
the
yet.
best day. Yeah, we are probably gonna have about.
Friday's not an option.
Friday.
Got it. Okay, so we're probably gonna have like 10 to 15 more members next week if you guys come, which I hope you do. But he has to leave, but
Should be a Wednesday.
yeah, we could do that.
Oh, yeah,
We'll figure out what works for
That's VP
what works
right
best
there.
for you guys. Yeah.
Going back to that question about what happens if the stock market crashes. If the stock market crashes, are you required to sell all your shares or can you
No.
ride it out? We're so young.
That is exactly the point.
Wait,
What you should, okay, here, I'll give you an example. So, occasionally there is going to be stock market crashes, okay? An example of that would have been in 2020, so, we'll pull up an example of it. Okay. So here is 2020, so, within about 30 days, 30%, about 35% was removed from the stock market. And this is, I'll explain what this is first. So this is called the S&P 500, okay? So it is a collection of the 500 biggest stocks in the stock market. So this can represent the entire stock market as an example. Like individual companies, they obviously fluctuate a lot, but once you get a large portion of them, then it starts to show our entire market as a whole. So you can invest in these index funds because, let's say you put $1,000 in, it owns 500 companies. You own a bunch of companies now, while just making one investment. So this is a very, very easy way to achieve very, very consistent returns, but they're not high. This is where I said the stock market averages 10 to 11% a year. That's because the S&P 500 averages that. So everybody understand what I'm saying?
Yeah.
Okay. So when the stock market does crash, you never want to sell. It's always going to go. It will always come back. If it doesn't, then we have a lot bigger problems. Like chaos in our society. That means our society is failing, our economy is failing. Like there's be a lot worse things to worry about than your money going away. So you should always buy more when it goes down. This is the biggest mistake that everybody makes is they panic sell because they know it's their money. And they're seeing that they're losing money and they want to stop it because they don't want to lose any more. But it never works out like that. The stock market will never just go down and keep on going down. It's just not possible. So, yeah.
Okay, but what if you put money into a company and they sell it?
What do you mean?
Like, you know how you put bids in a company like Walmart? Let's
Yeah.
say Walmart they sell their company. What happens to them?
So you get your shares bought out. So it depends. I honestly haven't had to deal with this with any of my investments, so it's honestly a good question. But normally it gets transferred to the other company, and then you own shares in the other company, or I would assume it's something like that. Okay. Yeah. So, any questions so far? Yeah.
What about if a company goes bankrupt?
You're out of luck. I believe. So. I mean, like I've never had this experience, so honestly, I don't. I forget a lot of these smaller things. I've been doing this for so long, I barely worry about it. But I mean, I believe you just lose your entire investment. But this is where you start to consider market capitalizations. So larger companies have a much lower chance of going bankrupt. So obviously, and then they're also a lot riskier. Okay, smaller companies are, and the reason for that being is, let's say somebody who has $100 grand to invest in, they have $100 grand to invest with. Okay, let's say they buy a company worth $1 million. They just bought 10% of the company. So that makes the stock price fluctuate way much more than these bigger companies do, because every dollar that you invest, you're buying more and more of the company, the smaller the company gets. So if you're looking for consistent returns, you normally want to focus around large cap stocks, and those are very, very large market capitalizations. So you have like your Nvidias, your Apples, your Microsoft, your Amazon. These are always going to be normally very, very good companies. So I'll explain to you why share prices fluctuate. Yeah.
Okay, so let's say you put shares in a small growing company. Would you make money more if it like exploded? Yeah.
Yeah. So that's also the risk reward thing. So I have a lot of positions in a lot of biotech companies, a lot of small companies, because the returns are astronomical. But you also risk losing a lot of your investment. So I wouldn't suggest the majority of you guys use this, but I kind of just take it with the sense that, you know, I'm young, I can afford to lose money. I would probably suggest you guys to go for more consistent and stable investments, which that's probably what we'll be doing. But that's also the concept of diversification. So you shouldn't have like, have you guys ever heard the term, don't put all your eggs in one basket? So that's like, if you had $1,000 to invest, you wouldn't want to just buy one company. You want to buy, I normally split it up between 20 to 30 good companies, and that's generally a good way of diversification. Because if you put all your money in one company, it goes down 20%, lost 20%. But the chances of 20 companies going down 20% a month, very, very low. So, yeah. So the reason that these share prices fluctuate like this, it's from supply and demand. So it's mainly an economics term, but it's similar in this, is more people are buying it, and the price goes up. More people are selling it, and the price goes down. So that's why you analyze companies to see if they're a favorable business, because then that means more people would want to buy into them. So, yeah. Any questions so far? No? Okay. Well, that's good. I'm not gonna really go too far into like teaching you guys today, but I more just want to ask you guys, like, what do you want to get out of this club? Like, what do you guys want to do? What do you want to learn? Like, is there anything specific?
Like, will we actually like be able to make money?
Yeah. So generally the plan for this is going to be, I'm going to try to teach you guys a lot of the basics of how to analyze companies, just how to identify a good business, a lot of stuff like that, and then eventually we're going to try to work up to managing our own accounts. So hopefully we will open up investment accounts for every one of you guys if we can, and then we'll all work together and we'll create a portfolio of stocks that we think is good, and then we will make money off of that. I mean, you have my insight, and we also have all of you guys. So we have a lot more workforce than I'm usually used to dealing with. Because I work with 3 other people, so I feel like we can get a lot done. Even considering you guys are beginners to this stuff, we still get a lot of ground covered, and there's definitely a lot of money to be made in this. So another thing I want to do is I want to do a lot of fundraising and charity things. This doesn't necessarily have to involve all of you guys, but mainly these meetings are going to be to teach you guys, but I also want to do some fundraising and charity things in the background. Any other questions? Yeah.
Can you get service hours from this club?
Yeah, I don't know, honestly. That's actually.
No, you can't.
No?
Not if you're gonna be making a profit, you
Yeah.
won't be able to get service hours for any type of
What if we're.
monetary value.
Yeah, could we get service hours for like fundraising efforts stuff?
That could be a separate thing, yeah.
Okay. Yeah. I was thinking we could separate those things into different things, sure. We'll figure it out, but. Yeah.
We don't learn about like market trends, like I don't know the specific terminology about how to kind of predict where stocks are gonna go based on what they've done in the past.
Yeah, so that's a question you asked. What does bull and bear mean? So these are probably going to be some terms you're going to use. Bullish generally means upwards trend, like it's going up. Bearish normally means that it's going down. I don't really know why it's called that. It's just what's used on Wall Street. So depending on how involved you guys are in this, I'll probably maybe do like a newsletter type of thing. So I could send you guys like just a little quick thing at the end of the week, tell you what happened in the market, what stocks are going up, any news. And I mean, really, this club could be whatever you guys want it to be. It just really just depends how involved you want to be. But I'm hoping most of you guys really want to learn this stuff. I mean, it is important for your guys' future. It really is. And I mean, it even just shows that with this. I mean, if you guys start investing now, you are almost guaranteed to be a millionaire by the time you retire. Almost guaranteed. There's a pretty low chance that you won't be. Especially if you keep on contributing over the years. Just starting now, it's such a big difference. I mean, you can just look at this. The difference between a 10, 20-year outlook, literally 4 times. It's crazy. If you invest for like 50 years over, like here, we'll use this as an example actually. We'll set length of time, let's say 50. By the time probably most of us are going to retire, you will have 7.7 million estimated. And that's just contributing 200. So, like I said, it doesn't really matter how much you guys put in, as long as you're putting in something. It will accumulate.
So is there any negative aspect if everybody started investing in stocks and everybody bought a share of the company?
What do you mean? Like,
If everybody just like bought a share.
bought like one specific stock, are you talking about?
Yeah.
Okay, so that's where that's called like a, basically, what can happen with that is, it's called like a pump and dump scheme. So what some people do is, they'll open like a sketchy cryptocurrency or like a small company, and then what they'll do is, they'll buy up a lot of shares, so like say they own 10%, and they'll promote it a lot, they'll tell a bunch of other people to buy it, and the share price will increase by a lot. And then once it does that, that person who owns a really, really significant amount in that company can then sell it, and the share price will plummet. And then that one person makes a bunch of money, everybody else loses. So that can happen sometimes, it's very illegal, but yeah, that can happen. Any other questions? Okay. Honestly, I really didn't want to go too much into teaching this today. I really just wanted to meet you guys, just talk about what we were doing, and yeah. So we really don't have anything else much to do. We're gonna have meetings every Thursday. Yeah, we'll get started. I'll probably record all these lectures, and then I'll post them on YouTube if you guys ever want to watch over them or anything. Like I said, really how far you want to go in this just depends on how much effort you put in. So, I mean, this is not going to be like schoolwork or anything. I'm not going to give you his homework or just come in, listen, take notes if you want. Just apply it later. We will later in the school year.
I think we'll be utilizing like stock market simulations, like, I don't know the name of the website, but we use it in like 8th grade, if you ever did like a stock market.
Yeah, so we'll use what's called paper trading. So you can trade using fake money and then see how you perform in the real market.
Yeah.
So what we're gonna do eventually is, I want this to be sort of like I don't want to say a mini hedge fund, but like we're many. I want us all to be able to collaborate once we get to a good enough spot where most of us are pretty knowledgeable about this. And then I want us all to start researching stocks together, and then create a big portfolio of a bunch of different stocks, and then we can achieve, I guarantee we can achieve very, very significant returns, much above the market. I normally average anywhere 16 to 17% a year. I'm sure we'll be somewhere around that, but I want us all just be researching stocks, and then we'll manage it all together. We'll make decisions together on it, collaborate, and yeah. So we'll be tracking the performance of that. We'll see if we can outperform the market. Yeah. So I was thinking of also eventually hosting a competition where I'll put up prizes for whoever does the best. If you wanted to, I think that could be interesting later, but. Yeah.
Are you planning on just doing this after school, or is it gonna be like during lunches too?
I don't. It honestly just depends on what you guys want. I mean, really, I have fifth lunch. Braxton is in third lunch. He's pretty knowledgeable about stuff. If you want to do something with that, but I'll send out that form soon, and then we'll figure out what days and what times work are best for everybody, and then maybe, I don't know, we could figure something out. Miss H's room isn't available during fifth lunch, so we probably have to figure out an alternative, but.
Still an option. Not an option. For me.
Strong maybe.
Okay. So, yeah, I think that's it, everybody. But, hopefully you come back Thursday and we can really start learning more, doing a lot. Yeah, that's it.
Should they have permission or know what their parents think about them by next week opening an account under their name?
Yeah, we probably get that process started, yeah. Just talk to your parents, if anybody wants to write this down, talk to them about a custodial account. So, yeah, just ask your parents what they think about opening an investment account, whether they'd be open to you doing that. Talk about look up a custodial account. Yes.
Are you gonna give us the reminder today, or is it?
Yeah, we will. So if everybody wants to sign up for the remind, we'll talk a little bit on there. I'll delete some stuff. Got it. Code.
Alright, did any of you guys not fill out the form for the interest on the school form?
Oh, I didn't do that.
No?
Are you making group chat out of that?
Yeah, we're gonna use the emails you guys responded with to make a group chat and talk about the new info and stuff like that. So if you guys didn't already sign up, come up here.